welcome back to our channel. I'm Linda.
Hi, this is Yoyo here. We're all from Midas.
And go make yourself very, very comfortable and pour yourself a glass of wine because
we're gonna go through a lot of numbers today.
Enjoy!
Cheers!
If our video has been valuable to you, don't forget to subscribe to our channel and click the notification bell so you don't miss out on our new videos.
If you haven't seen our last video on my personal experience of buying a house versus an apartment, please check it out.
I really love that video, Yoyo, because I loved how you actually talked about your real life scenarios with real numbers. So let's get into some real numbers again today, and let's get into some calculations so that we can illustrate some scenarios.
Sure, Linda. I guess numbers never lie, do they?
You're right. I have a friend and she's working as a graduate teacher, earning roughly $65,000 before tax. She actually is open to buying an owner-occupied property or an investment property, but she wants two things. And number one is that she wants her own space, and number two, that she told me she wants to make a really good financial decision.
Wow, I'm glad that you mentioned that she wants to make a good financial decision. I guess no one wants to make a bad financial decision. However, many people, they may not have a clear goal or plan before buying a property. They don't consider financial consequences beyond their first purchase.
So what are some tips that you can give my friend or someone else in that scenario who's deciding between buying an owner-occupied property versus an investment property?
Sure. If you have watched our last video, I would say it again. Have clarity, know why you are buying a property, and also know your numbers. Know the financial impact that your first property will have on your second and the third and so forth. But instead of telling you why, let's do some numbers crunching.
Let's do that. Awesome. So let's compare the cash flow difference now between an owner-occupied property versus an investment property. And I'll just start off with the owner-occupied property.
Excellent.
Alright, so here we've got the owner-occupied property scenario. This is just a snapshot. So we're basing this whole numbers scenario on buying a $550,000 house, which is around the median house price. My friend earns a $65,000 salary. We're going to calculate using a 4% interest rate. We know that the interest rate is lower at the moment, but we're just using 4% to be very conservative, just in case it goes up higher in the future. And let's just say she borrows at an 85% loan to value ratio. The income that she will receive from this property will be $0, obviously, because we're assuming that she's the one living in this property. And the expenses, we've calculated at around $31,500. So the way we calculated that was we calculated all the council and water bills, which is around $4,000. The lender's mortgage insurance, $5,000. The interest on the loan at 4%. $18,700. We've used interest only, not interest and principal repayments, because different people have different amounts of repayments and that will vary between different people. But if you want to include that, you'll have to do that separately as your own calculation. Electricity, $2,000, internet bills around $840 a year, and insurance at $1,000. So just keep in mind these expenses. We can also call it a holding cost, so keep that number in mind for the next couple of slides. Hope you're enjoying so far, and I hope you've got your wine close by so far. So this is pretty straightforward. As an owner-occupier, she's on a $65,000 salary, and she'll have to pay $13,000 on her salary as tax. Basically, her weekly cash flow from this house is she doesn't have any rental income. She's got $31,500 total expenses or holding costs. Her tax return or her tax savings is $0 because she doesn't get anything back because it's not tax deductible. A lot of her expenses are not tax deductible. And so out of pocket, she'll be $606 out of pocket a week and $31,500 a year out of pocket.
Thanks, Linda, for demonstrating your first scenario. Let's move on to the second investment property scenario, which is always excites me the most. Are you ready for this, guys?
Yes.
Okay, cool. So I wanted to repeat all this because this is your investment property, so you do have the rental income. I use $500 per week to be conservative, so yearly you're gonna have $26,000 as rental income. Let's move on to the holding cost. Each year, the city council water rates cost you $2,000, insurance $1,000, which is include the building insurance plus landlord protection insurance. Landlord fee 8.8%, which is include the GST, and that is quite calculated based on the 95% of your rental because we do consider 5% vacancy rate. So that is roughly around 2,100. So the fourth one, interest on loan, which is we use 4%, and in this scenario we use interest only as well. Mortgage insurance, which is $5,000 if you borrow over 80% LVR. Vacancy rate, as mentioned before, we consider 5%, so that is roughly 1,300. Letting fee, which is equals first week rent, 500 plus the GST, so it's 550. Body corp, 0, because this is a house. And we also consider other like tax deductible expenses, something like accounting fees and loan fees, which is all add up together is 1,300. So that is all your expenses, 32 grand a year of holding an investment property. Now we are getting the most important and exciting part. So this slide demonstrates the real holding cost after considering the tax implication, because buying an investment property is not just the expenses and the rental income. If you do have salaries, you need to pay tax, so we need to consider the tax as well. But that is just for demonstration only. For your personal finance situation, you do need to consult your tax accountant. Alright, okay. So let's say annual salary, if she earns $65,000, she need to pay tax around 13 grand a year. Because she got the investment property, we need to consider the rental income as well. So annual salary plus the rental income, that's combined income is $91,000. Let's move on to the expenses. The good thing about the investment property is all the expenses is 100% tax deductible. So this 32 grand from the last slide, and on top of that, brand new property give you the maximum depreciation, which is also tax deductible. In this case, this house depreciation $15,000 for the first year is based on the brand new property, which is $550,000. So the total deduction is $47,000, which include the expenses plus the depreciation. So we use combined annual income $91,000 minus the total tax deduction, which is give us the new taxable income $44,000. And based on the $44,000, you roughly pay $5,800 for tax. Let's just compare. If you don't have any investment property, or if you just own in your own home, so that's the tax you need to pay based on $65,000 annual salary, $13,000. Remember this figure? And if you have investment property, that's the new tax you pay, which is $5,800. So it gives you $7,200 as tax savings, which you get the tax return. So let's have a look at the weekly cash flow. Your rental income, $26,000 a year, minus all the expenses, $32,000, and the plus the tax return, which gives you $1,200 a year. That equals $23 per week. As you can see, in this investment property scenario, it costs you nothing to hold this investment property, but it gives you roughly around $1,000 a year positive cash. Isn't that good?
Yes, it is good, Yo-Yo. So let's bring it all back together. Let's lay out everything in black and white so we can really have a good look at the two. But we've included even a bigger picture for these two scenarios as well. So looking at the owner-occupied scenario, if my friend were to buy an owner-occupied property, she's on $65,000. This is the tax that she has to pay out of pocket. Obviously, she doesn't get any taxable deductions that she can get back into her pocket. This is the net holding expenses. So do you remember that slide that we went through with that red figure with all the council bills and all that, those expenses? That's this figure right here. This is the expenses that she has to pay out of pocket. Right? You've got your living costs. So we've used roughly $15,000 for a single person to buy things like food and everything else unrelated to your house bills. This is just personal things like clothes and makeup and perfume and things like that, and shoes. If we take all of that out from your income, you've got roughly $6,000 of savings left. Okay, so let's look at the investment scenario now. So same, likewise, if she was to get an investment property, she's earning $65,000. Her tax payable is now $5,800, which is roughly $6,000. Your net holding expenses, remember that slide that Yo-Yo went through, the net expenses, which was the rental income minus your expenses plus your tax savings all together, you get about $1,000 net. We've just included everything in here for that. Obviously, if you have an investment property, you're going to need to rent somewhere else. We've actually included $500 as your rental for a single person, and that's more than enough. So $500 a week, that is $26,000 a year to the cost of rent that we've included here. And notice also that, as you rent outside, you get to rent wherever you want to live, and you have more flexibility as well. Your living cost doesn't include anything got to do with the house, just your own personal food and clothes and etc. And so if you get your income, you minus that, plus that, minus your rental cost, minus your living costs, you're actually still left with $19,000, and that's actually minimum because you might not spend that much on rent.
Thanks, Linda, for the summary.
No worries.
As you can see, your friend does have two options, and if she goes for the investment property, which obviously she can speed up her savings and buy the next one faster, but it's always the best to consult the accountant for her own personal situation.
That's right. Look, that comes to the end of our video. Thank you so much for watching, and we hope that you found it valuable and helpful. I'm sure you finished your wine like me.
Well done, guys.
Yes, well done. And we'll see you next time. And if you like this video, please click the like button below.
Yeah, and don't forget to subscribe our channel and click the notification bell for the upcoming videos.
Yes, we'll see you next time.
See ya.
Bye.
And most of them, they don't.
Most of them. They don't. Most of them. Nah. Most of them, yeah. You don't know anything. That's why we're here, to teach you.